Before we begin, let's walk through our webinar platform together. Each of the buttons at the bottom of your screen relate to sections in the ON24 console. The speaker view is where you will see our presenters throughout the webinar. The slide view is where you'll see the accompanying slides. Our poll questions will also appear in the slide area. Be sure to click directly on the slide to answer poll questions throughout the webinar. You can resize these widgets for a larger or smaller view. You may follow along also with a PDF version of the slides that can be found in the related content widget. The CPE criteria section details the requirements you must meet to receive full credit for CPE in this session. To obtain CPE, you must do two things. First, be on the live webinar for at least 50 minutes, and second, respond to 3 of the 4 polling questions that will appear throughout the presentation. You can track your viewing progress in this Earn CPE widget on your screen throughout the webinar. By registering for today's event, you will automatically receive an email after 24 hours with a link to download the slides and a link to view the recording. Additionally, if you meet all the criteria and qualify for CPE, a link to your CPE certificate will be in that email as well. Please remember that it does take 24 hours for that email to be automatically generated, so look for it sometime tomorrow afternoon. For CPE-related questions, please reach out to cpe@yptc.com. In the related content section, you can access any accompanying materials for this webinar. This includes a PDF copy of the slides and many times will often include related resources. Reactions from our audience throughout the webinar will float along the console screen. Use the Q&A section to ask questions directly to our speakers throughout the presentation. In the speaker bio section, you can find more about our presenters, including their contact information. If you need technical assistance, please use the help button below. Many times, technical issues can be resolved by opening the webinar in Google Chrome or refreshing your browser. Finally, the evaluation button contains our post-webinar evaluation survey. Here is where you can share your commentary and feedback on the presentation. We hope you enjoy our free webinar. Now, let's get into today's topic.
Your part-time controller is a professional services firm that has specialized in nonprofit financial management for over 30 years. At YPTC, we say that the biggest goal of our work is to give our clients clear and quality information so they can make informed business decisions. Our services include the day-to-day accounting, financial reporting, data visualization, and implementation of best practices for nonprofits, just to name a few. We currently serve over 1,900 clients located throughout the United States, as well as several other countries. We have 12 regional offices, and with continued growth, we are proud to serve clients remotely all over the country. Hi, my name is Larry Kaplan, and I will be your moderator for today's presentation on Association Insights, Reconciliation Resolutions. We have an esteemed panel of experts joining us for our conversation today, and I will let them introduce themselves.
Hi, I'm Michael Sidowitz. I'm an associate in the Phoenix market and have been with YPTC for over 4.5 years. I am a CPA and have over 35 years of accounting experience, many of those in the not-for-profit industry.
Hi, everyone. I'm Tiffany Williams, an associate in the Washington, D.C. market and have been at YPTC for almost 2 years. I'm a CPA with over 25 years of accounting experience with both nonprofit and for-profit organizations.
Hello, I'm Liz White, an associate in the remote services market and have been with YPTC for over 2 years. I'm a CPA with over 15 years of experience and love working with nonprofits and leveraging technology to create efficiencies in accounting softwares.
If you've never had problems reconciling your credit card payments for dues or conference registrations to the deposits in your bank account, today's discussion might not be for you. But on the other hand, if you feel like finding deposit totals that match in various reports and systems is the exception rather than the rule, or you are looking for better ways or ideas to reconcile, then you're in the right place. We're going to share some of our lessons learned and give you some suggestions for how to save some steps and headaches. These are the learning objectives for our discussion today, and our panelists will have some amazing experience to help illustrate the importance of and demonstrate how to accomplish all three of these. Please note, any systems referenced or mentioned during this presentation are for illustrative purposes only and are not intended as an endorsement or recommendation. And before we dive into our conversation, we have our first poll question. Please click on the options in the slide and respond to the poll. We'd love to hear who's online with us today, and if you don't see yourself there, please go ahead and add yourself to the Q&A. All right, we'll give it a few more seconds here for everyone else to click in. Okay, and we'll move on. Let's see what we have. Okay, we have a few of the executive directors or CEOs. Oh, a large portion of the finance team, and I guess that's really not a surprise. We have someone from membership, and we have a few of others. I'd love to find out what those will be. We can look at that a little later. To set the stage, here are some key terminology that will be used during our panel's discussion today. Discovering and resolving reconciliation system challenges can require putting on your detective's hat and be like Sherlock Holmes with the clues in each of these pieces. While we have the general definitions listed here, our panelists will help us in defining these terms and providing examples and key indicators. YPTC has a specialization area specifically for associations with staff that have years of working experience in problem solving in this industry. A common theme we see with clients is the challenging and difficult reconciliations between the association management system, or AMS, and the accounting system. The problem can come from cash and checks, but most frequently we see it with credit card payments and to some degree ACH payments. Today we plan to discuss some of the situations we see, as well as approaches that we can take to solve some of the challenges, and we'll hear different perspectives and process from each of our panelists. As my psychologist wife always tells me, the first step to solving a problem is admitting or recognizing there is one. With that in mind, I'll ask our panelists, what do you see as the first indication of trouble?
Larry, I'll start off. I've seen many common indications of reconciliation challenges. I wonder how many of our participants in the audience have experienced some of these challenges I'm going to mention. The current process to complete bank reconciliations is way too time-consuming. It may take days or weeks to complete. Why would that be? Maybe it's the result of the AMS system not providing meaningful reports that allow staff to make an entry in the accounting system. I am sure this is causing staff to perform physical gymnastics, obtaining data from the AMS system, creating mapping tables, VLOOKUPs, pivot tables, to group and match data to ensure proper classification to create a journal entry in the accounting system. Maybe the staff keep a manual list of all the fee items that their association uses. They update the list each month for new fee items and map them to the revenue code or department or class in the accounting system. Or how about the manual process of tracing credit card charges from the merchant service provider reports to the AMS and then grouping those charges to match what was deposited in the bank? There is always a lag between the transaction date and the deposit in the bank. Does the staff have full faith in the AMS, or do they maybe have safety measures to enter invoices and receipts in the AMS? And also manually create or an Excel or a Word document that matches what was entered into the system, creating yet another data point to add to the mix when reconciling. I have seen all of these scenarios.
Michael, you mentioned keeping a manual list of fee items and updating them each month. Why would that be necessary?
Well, Larry, some associations are either on a very old AMS or one they've inherited from previous staff. If they were lucky enough to implement a new system, the energy spent creating the member experience, the end user, overshadows the reporting and accounting aspects of the implementation. Now, most AMSs today are robust and can eliminate many of the reconciliation challenges that staff face.
And Tiffany, what have you seen?
Well, yeah, Michael, while everyone loves an AMS robust enough to integrate with the accounting system to do the entries automatically, as you mentioned, many are not, resulting in a very manual process that is prone to error, making reconciliations overcomplicated and challenging. For instance, another indication of reconciliation challenges appear as account receivables for unpaid membership renewal invoices are in the accounting system. This is a sign that revenue may have been overstated for members with no intention of renewing. Reversals of these receivables are necessary to properly state revenue, since revenue is not earned at the time of billing, but as payments are received. And in accordance with GAAP, generally accepted accounting principles, recognized over the membership term. Some organizations will upload every AMS invoice into the accounting system at the start of the membership year and do workaround journal entries to account for the changes in receivables from the AMS, sometimes resulting in negative monthly revenue. I've also seen challenges when the associations have an AMS and separate CMS, which is a conference management system, which handles registrations, sponsorships, events, and merchandise. The CMS is another data point in the reconciliation process, creating up to 4 sources of information to be reconciled. Understanding if the AMS and CMS are independent or integrated, whereby conference-related transactions can be reflected in both systems, it's important as duplicated invoices wreak havoc on a reconciliation process. Additionally, while advanced conference purchases may be handled correctly, there may also be issues on site at the conference where transactions are not processed correctly. Other payment processors like Square may be used, and if product codes and prices are not set up in advance, transactions can be miscoded or not coded, resulting in revenue not properly classified. And just one more example of common reconciliations I've seen is when an association has not updated its AMS to clear out outstanding renewal invoices for previous membership years. This can create accounting issues because some AMS systems apply payments to the oldest invoices first, making it appear like a member has paid for a previous year, when in fact they may have skipped a year and are current.
Another indication of trouble for a client can be bank accounts not being reconciled at all. Common client projects we work on involve being brought in to clean up and catch up 12 months or even more of reconciliations, as well as to document, review, and process modification and enhancements to procedures. Many issues can arise. Transactions can be posted to the improper bank accounts. Processing fees and account transfers may be missing from the accounting system altogether. And various other issues may be occurring that result in inaccurate balances, showing in general ledger accounts across many different accounts. Some organizations with a new accounting system may have little or no parallel processing time, or virtually no exposure for the frontline accounting staff prior to implementation. New systems or even new bank accounts or new merchant processors can lead to inconsistent and unmanageable workloads. cumbersome workarounds, and the team can get so far behind, the focus becomes trying to stay afloat and getting transactions posted. And procedures such as revenue recognition and other vital month-end processes fall to the wayside. With new systems, promises can be made during the sales process regarding how they work and how they integrate with other platforms. And sometimes it just does not work out as proposed. The organization can be expecting better results and a more streamlined process, but instead it's worse than the prior method.
Okay, so we've defined some big issues here. Manual record keeping and data entry can be a source of errors and is very time consuming. Overly complicated processes and workarounds that don't always work or are hard to follow. And if bank reconciliations are not done, how can you trust that financial reports are accurate? As a best practice, a copy of the bank reconciliation should be provided with month-end reports. We meet with lots of nonprofit executives that are struggling with their bank reconciliations, sometimes known and sometimes unknown, and it is clearly an issue. To reiterate the key pieces from the panelists' thoughts, here are some red flags indicating there may be reconciliation issues. Your monthly reports are delayed. High staff workload, especially at month-end closing. Many manual processes that slow down work. New systems or overly complicated processes that take too long. Accounting issues with old dues receivables. Incomplete and/or missing transactions. Each of these are signs of trouble that you will want to address. And that brings us to our second poll question. How confident are you in your current process for reconciling credit card and other payments? And we'll give about a minute here for people to reply.
Larry, it would be interesting if some of the attendees could maybe put in the chat some of the reconciling issues that they may be experiencing.
That's a very good point, Michael. That would be great to see. All right, we'll give about 10 more seconds here for the poll. All right, and we'll close out. So it looks like the confident but with room for improvement wins out. That would seem to be almost equal between the very confident and somewhat. And I know some of us here always have that feeling of we're not quite there, not quite at all yet.
Hey, Larry, there's a question that was proposed, and maybe we can give a little feedback on that. The question is, can we name the AMS system that we've worked with the most? You know, maybe we could just throw out a couple of names that we've worked with. I've worked with Growth Zone.
I've worked with Impexium as well as MemberClicks and your membership.
And I'll throw in, I have past experience with NetForum and IMIS, and a very old system, but I won't go into what those are. Okay, so now we've identified several issues and what those issues or problems are causing. So I'm going to ask the panelists, what did you do to address them? And Michael, why don't you start us out?
All right. So to start, evaluate the AMS to see what the full capabilities are in the system. Ask the AMS vendor to do a product demo. Now, although you may have been using the system for a while, you may not be using or be aware of all of the features and functions that the system is capable of. Or maybe the association is contemplating the implementation of a new AMS, and wouldn't that be wonderful in a lot of situations? Well, under either scenario, have the accounting folks in the mix of the meetings with the AMS as early in the process as possible. I'm going to say that again, as early in the process as possible. Accounting folks can listen to what the membership staff want the system to do, what the AMS vendor demos and says they can do, and then provide guidance on how the back end of the system should be set up so we can automate processes.
Michael, earlier you mentioned that viewers may be performing physical gymnastics to get the data in a format they can use to complete the bank rec and record revenue in the accounting system. How can viewing a vendor demo or getting into the implementation meetings help to improve that process?
Larry, that's a really great question. I've seen organizations create a listing in the AMS of every fee item used for a sponsorship, a membership, or a registration for each event, for each year the event occurred. That can add hundreds of codes to the listing each year, and that makes it difficult to manage or report on. In my experience, AMSs have a setup feature where an association can create a fee item listing and map those fee items to the accounting system general ledger code. The AMS also has a setup in the events for the charges that are going to be included on invoices for the members. Think of this as the offering list for memberships, registrations, and sponsorships. The association may have multiple levels of membership, multiple levels of registration, and even multiple sponsorship opportunities. The association can have one fee item for each of the charges that show up on the invoice that they're mapping. Take the example of a golf outing. A lot of associations use golf outings as a way to raise some additional funding. The event set up in the AMS can provide the members with all of the choices that the event has to offer. Maybe there's an opportunity for a hole-in-one sponsor, a longest drive sponsor, and maybe a sponsor for each of the 18 holes. When the sponsorships are set up in the event, each one should be mapped to the same fee item that was created to correspond to the sponsor code in the accounting system. In this example, I gave 20 sponsorship opportunities for a golf outing in the event, all mapped to one fee item called sponsorship. And that fee item maps to the code in your accounting system for sponsorships. At the end of the month, you can easily run a report by the fee item and have a summary entry to record your revenue. That eliminates all the gymnastics I mentioned earlier. You don't lose any reporting function, you gain it, and you simplify your accounting and reconciliation functions.
Yeah, and once the initial issues have been identified, in my experience, documentation is key. There are situations where an ED and staff should be involved as they know what to do or how to do it, but maybe not why, and are unable to explain it. If an association has difficulty understanding the revenue recording process and reporting, as in my example, where there are hundreds of open invoices in the accounting system, obtaining or creating a roadmap to understand the flow of information is essential. To talk about some of the accounting gymnastics that are done, when revenue had been created in my example, for all invoices when created, regardless of whether the member renewed, and monthly adjustments were made to revenue, the goal was to revise the process, to zero out the receivables, and properly record revenue based on receipts. In this example, since bank statements had been reconciled, adjustments were made not to impact cash. The outstanding membership invoices were paid in the accounting subledger to reduce AR and cash, and an offsetting journal entry was done to keep cash in balance. As I mentioned, an association should also review and simplify the AMS charges to ensure correct GL accounts and classes are used. Next came developing and documenting a new process to create Excel files with monthly transaction downloads from the AMS, CMS, payment gateway, and bank deposits utilizing VLOOKUPs and pivot tables to summarize, compare, match, and code them by revenue account based on the transaction ID, settlement date and time, and invoice number and description, making booking the revenue by journal entry much easier with supporting documentation available for reference. Additionally, creating deferred revenue worksheets to calculate the monthly recognition of revenue throughout the membership period or when the conference is held helps to ensure accounting is in accordance with GAAP.
So once you cleaned up the old data, you used your detective skills to find a common field or code that you could track across the various systems and documented the process going forward so you could make correct entries going forward. Is that correct?
Exactly.
And when there are new accounting systems and new banks or merchant processors being used, and we're not able to work with the vendors or the banks during the setup, we can be stuck trying to figure out how to achieve the desired results with the existing setup and the information we have available to us. If systems are set up too quickly and with not enough coordination or involvement from the key staff members, it can cause various challenges when it comes time to reconcile and close out the books each month. Ideally, any implementation should take 6 to 12 months, and you may need extra help to keep things going if you want to implement on the lower end of that timetable. Also, the planning should include notifying end user members and vendors with enough time for them to make any necessary adjustments. They need a minimum of 30 to 60 days notice to update ACH payments when bank accounts change. And you should plan to ensure sufficient training and onboarding for the new processes and procedures for your internal team. The first step is we want to identify all the source data and the information we need from all the various systems involved. Next, access those reports needed from those systems with the key data required to reconcile. Then work to book any missing transactions and correct transactions that are posted improperly. You can use Excel and VLOOKUP or other formulas to aid the reconciliation process if necessary, but you always want to perform the bank account reconciliations within the accounting system, never within Excel. As Tiffany mentioned, it's recommended to generate procedures documentation as well as train staff for the current process. Once you understand the current process, propose recommended changes to the IT team and recommend workflows to improve, simplify, and even automate the processes going forward. Where possible, leverage automation and AI to ease the burden of manual processing and reconciliation. It's also advised to stay in tune with new features of both AMS and accounting systems. Your organization may be able to utilize these features to gain some efficiencies and leverage them, with the feature that already exists within the system.
So spending the time planning, documenting, and training is always time well spent. Liz, I've seen where some organizations use clearing accounts to stratify or segregate the various payment methods to make reconciliations easier. Is this something you've considered?
Yes, of course, Larry. Organizations with large transaction volumes should consider utilizing clearing accounts to reconcile transactions. A clearing account is an account that contains a balance temporarily before the balance is transferred to another account. You can use a clearing account to post transactions from a single source, such as ACH payments, payments from one merchant processor, or even a specific payment type, such as American Express transactions from one merchant processor. By posting all of these transactions into a clearing account initially, you can reconcile them here rather than reconciling them within the bank account that includes all the other transactions from different sources. By separating these transactions into the clearing account, you can focus on a more narrow data set, and this can lead to decreased reconciliation time.
Okay, it looks like we've got a few questions in our Q&A box. Let's see. A couple of them are referring about batching credit card transactions that don't match the closing time or registrations in the AMS. Anyone want to talk to that, how they worked around that and how you try to handle that?
I can talk to that. What I did was in the payment gateway, being able to run the reports by the settlement date and time. And from there, you should be able to determine the pattern, as they will be maybe 2 to 3 days off from when the actual transaction was settled.
I think also sometimes you can look to either your merchant processing provider or even the AMS if they are the merchant processing provider, and obtain a report that will give you all the transactions that add up, and then when that date the funds were transferred from the merchant provider to the bank. And that allows you to see that cutoff and what's in transit and what's not.
And with some processors, they will also provide a batch ID number, and you can track that through reporting, and they will be identified on the individual transaction level as well on the detailed reports.
And this actually falls right into where we're at here, which is looking at the bank reconciliation process itself as the biggest pain point. How long did it take you, our panelists, to complete the bank recs before the improvements? And what steps did you take to fix the process? And where did you end up in terms of timing? Tiffany, we'll start with you.
I'm sorry. Just finding my place. My apologies.
Larry, can you repeat the question?
Yeah, so we'll start with how long it took you to complete the bank rec process before the improvements, and what steps did you take to fix the process, and where did you end up in the terms of timing? I tell you while we wait.
Yes.
Would you like me? Tiffany,
Yes.
would you like me to jump in?
Please do.
Okay. So, I talked about mapping of your code. So once the mapping exercise is completed, the time to do the bank reconciliation and recording revenue in the accounting system should be substantially reduced. Another way to reduce the bank reconciliation challenges and reduce the time spent closing the books is, and I'm going to introduce another term, integrate. Integrate the AMS with your accounting system, if that is something that the AMS allows. With integration, information can be brought over to the accounting system either in the aggregate or at the individual transaction level. The level of detail, that would depend upon the functionality of the AMS, your accounting system, and your preference. You may not want all of the detail in your accounting system. You may just want batch data. I've seen all invoices that are sent to the members and the members' respective payments sync over to the accounting system in real time. Now, this eliminates any need to create spreadsheets or incur duplicate data entry. And the bank reconciliation becomes even more efficient.
Yes, and it's important to, yes, I found my way. It's important to make sure you have the right reports. The payment process goes through multiple stages. The AMS, payment gateway, and merchant servicers should all produce reports. Each may have a separate piece of the puzzle, but can all be connected to follow the money through the cycle from inception to bank deposit. Once I was able to do that, it simplified my process from weeks to hours.
So you were able to group the transactions by payment type and date, and also important to include the time in case the merchant processing cutoff times are impacting which transactions are grouped for each day's deposit.
I was. While the first bank rec took many hours to understand where the information came from and why the process was done the way it was, reaching out to YPTC's association vertical team for assistance helped a lot. The first step was to download transaction details from the payment gateway. Transactions that were declined were sorted and deleted. Then, using the payment gateway's report as the primary source, the transactions were grouped by settlement date and time. Depending on how your AMS works, the signs may need to be changed for credits and refunds. Next, bank transactions from the accounting system were downloaded and matched and sorted and subtotaled deposit amounts from the payment gateway. Due to timing and cutoff of the credit card merchant, there may be timing difference. In this case, transactions processed by the AMS payment gateway were recorded as undeposited funds. As I mentioned, to create the journal entries, pivot tables and lookup functions were used to match the key fields.
Hey, Larry, but I noticed an item come in the questions, and I know we covered it at the beginning, but there's a question of what is an AMS, and I just want to take a moment and address that. An AMS is an association management system. It's where you keep track of all your members and all the activity related to your members.
Thanks, Michael. I also want to come back to you, Michael, about when you were preparing for this presentation, you mentioned an implementation that you did. Can you share your experience with the viewers?
Sure. I worked with an association that made the decision to migrate to a new AMS. In the process, we did all the things that I discussed earlier to gain efficiencies from the new AMS. The one aspect of the implementation that was not live yet was the integration by the AMS vendor, who in this case was Growth Zone, to the accounting system, and that was QuickBooks Online. It was on the horizon for the next quarter after we went live, and that made me, the nerd, super excited. So excited that I got on the phone and I spoke with the AMS vendor and I asked to be a beta tester. And for those that may be wondering, a beta tester is someone that gets early access to the software, updates, to work with the vendor to test the new enhancements before they go live to all users that use the system. What an eye-opening experience. During the testing, I was able to identify several gaps in the data that was coming over the interface from the AMS to the accounting system. Most important was the transaction ID from the credit card transaction that was coming over but was being truncated, and it was leaving off the last 7 digits. Now, this complicated the bank reconciliation process. Having that unique number allows you to match your transactions. The vendor took this feedback that I provided and realized the field they were bringing the ID into QuickBooks had character limitations. So they created a new field to come through the interface, removing the issue and adding efficiencies to the bank reconciliation. Another item to look at to add efficiencies is evaluating your merchant service provider. The cost should not be the only factor in making that decision. Consider the time savings you may gain by using the AMS merchant versus your current merchant. In my example, the association decided to use the AMS's merchant. The bank reconciliation became an even smoother process. Now I can run a transfer report from the AMS, which gives me all the transactions, even credit card transactions, and what date they transferred to the bank. And that's because we're using the AMS's merchant. And the transaction IDs, they all match. The transfer report shows each transaction that makes up the deposit. It includes the amount that was transferred to the bank and the related transaction fees, because in most systems, you know that you are going to charge an amount, they take out the fee, and what actually goes to the bank is less. So when I open the bank reconciliation in QuickBooks and the bank statement and the bank activity, I can easily flow. It's very easy to trace these transactions and mark them off in the bank rec within QuickBooks. Also mark them off in the transfer report and mark them off in the bank statement. The only manual entry in this example is having to record the merchant charges, which are listed on the transfer report. The integration process does require monitoring. I might have fallouts from the sync process between the AMS and the accounting system, but any fallouts produce an error message that are on a log report that gets emailed to me daily. Using the log report, I can investigate the reasons for the fallout, and then I can fix the issue so it does not happen again. A lot of times, errors are usually the result of new items that have been set up and used in the AMS, but have not been mapped to the interface that goes to the accounting system. So good communication when a new item is set up can eliminate fallouts.
So Michael, how did you come about getting into becoming a beta tester? How did you work that out with the vendor to get involved with that?
So in this particular example or situation, the time it was taking to close the books because there was no interface was 3 days. And knowing that there would be this interface, I didn't want to wait. So working with the implementation team, I kind of kept pushing them to say, when is it coming? When is it coming? And once they gave me a definitive date, I said, well, I want to test it. You know, it's still 2 months out. I want to see it and work with it so that when you release it, we can benefit from the enhancements that you're going to put in the system. And just sometimes you got to be persistent. And, you know, it's really eye-opening because you kind of see behind the scenes. You can sort of take the curtain away and see how the programmers are thinking. And what was interesting is they are not accountants. This is an AMS system that is trying to interface with an accounting system. So having someone with an accounting background actually gave them insight to how we're going to use the system and led to some of the additional enhancements that I mentioned. And if I could just add one more thing, I noticed in the notes there was a question asking if you get a discount for being a beta tester. And unfortunately, the answer to that is no. You get the satisfaction of knowing you have input in the end product, and hopefully that input gives you a better product.
And Michael, you make a very valid point here, especially for our audience who seem to be mostly the finance staff. AMS systems are really designed to provide value and information across the board for associations regarding membership, conferences, and pretty much everything that a member or a customer does and touches with your association. But they don't usually spend a lot of time on the accounting and money side. And so being able to get in as a beta tester and talk with them about what are the needs on accounting, so make sure that you can track all the money and reconcile it. And in your case, getting all the reports that provide the detail for your bank deposit surely simplifies this whole process.
Yeah, I agree.
And Liz, how about you?
Well, bank account reconciliation issues when you're reconciling the bank account, you can uncover many different transactional errors along the way. Payments being posted to incorrect bank accounts, the merchant fees not being posted, dollar values posted incorrectly due to perhaps a system not reflecting correct sales tax calculations, or early payment discounts not being reflected in the accounting system, and even foreign payments being recorded in USD in the system have all occurred. When you have a spider web of issues, the best plan of attack initially can be exporting the data to Excel and leveraging formulas and other tools to help with the bank reconciliation process to identify all of the areas that need to be addressed. Once the issues are identified, steps can be taken to address them individually and lead to process improvements that you can make to prevent the recurrence of common errors. Once a process is documented and the staff is trained in that process, they have the knowledge of that source data that provides the detailed information they need to resolve any issues that arise during the reconciliation process. If a transaction is not reconciling to the bank amount, they have a place to start looking for the error. And then they can potentially uncover an area for improvement along the way. We also do recommend that any corrections be posted within the month the error was made. This helps with the reconciliation process. And this also, I think, is going to touch on one of the questions in the chat box. Some bank accounts with very large transaction volumes, we recommend reconciling weekly or even daily, rather than waiting until month end. This will help even out the workload at the end of the month when you're closing out the books. And always look for enhancements and upgrades to systems that allow for automation of processing. And those should always be considered, whether it's a feature built into your AMS or accounting system, or a project for IT experts to build a custom automated solution. The accounting team should always be on the lookout for ways to improve efficiencies. If it's at all possible to test a new automation or solution in a test environment, you can work out any unknown issues before taking the new process live. Or alternatively, you can consider phasing in an automation by choosing one small account or a smaller set of transactions to test the new solution before rolling it out organization-wide.
So in summary, what we see here is understanding how to identify all the individual transactions in the AMS for the combined deposit that goes to the bank, and where to find all the individual pieces or transactions that match it along the process is the key to really reconciling and making this an efficient process. And with that, we're going to tee up here our third polling question. Have you implemented any automated tools or software to assist with your payment reconciliation?
Larry, while folks are answering the poll question, There was a mention in the chat about going to your merchant processor to ask for lower fees. You know, in today's environment, the business environment of expenses going up, it's always a good idea to reevaluate contracts, whether it's merchant service providers or other contracts, and see if you can go back to your vendor and negotiate a lower fee. Always a good idea.
Always a good idea, and you can never expect your merchant to come back to you and lower your fees for you. You do want to raise that question.
There was another question in the chat about batching credit card transactions at 5 p.m. every single day. And I would suggest reaching out to that merchant bank or the processor to see if you are able to change that time. I've done that in the past where we had multiple processors and they weren't batching on the same schedule for a client, and we were able to actually work with the processor and change it to where they were in line with the timing.
Yes, and taking that even one step further, depending on your AMS, some of them will actually allow you, if you're batch processing your transactions in your AMS, to actually match that cutoff time for your batches in your system to the cutoff time of your merchant. And that certainly is a way that you could ease in your reconciliation process. All right, we'll give about 10 more seconds here for the poll. All right. So it looks like we have, well, two of them being that you have significantly improved your process, and no, but you're considering it seem to be close, and the other two about the same.
It's almost 50% that are either considering it or are completely manual.
And for those out there, I would really recommend trying to find a way that you can speed that up in some way. It will certainly help with your month-end processing, and certainly helps, you know, with the headaches at the end of the month. From our last discussion, one thing we didn't talk about was that it is a phased process to get to a more automated process. You can't do everything all at once. Panelists, if you had one bit of advice or tip to share, what would that be?
Well, I would say even the best systems with great integrations have issues. One of the most simple sort of automated processes you can do is having a direct bank feed from your bank to your accounting system, which helps to see transactions timely and makes downloading deposits easy. Additionally, Excel VLOOKUPs are your friend. It saves time when matching transaction lists and can even be automated.
And it's great if you can do these things up front, but it's never too late to start. Work with your AMS vendor, payment gateway provider, or merchant service provider. You can work on batch timing, reference labels, and training.
But of course, you always want to invite finance and accounting to the table at the beginning, the middle, and after implementation. And if you are in finance or accounting, build on the comments before. Don't try to do it alone.
And those are all great tips. And with that, we're going to go on to our last polling question. What's been the biggest improvement in your reconciliation process over the past year? Have you improved integration between the AMS and accounting, implementing new software or tools, improved training and procedures, enhanced reporting and analytics? Or really, has there been no improvement and you were here to learn what you could do? we'll give that about 10 more seconds for people to reply. Well, it looks like we have definitely staff training and procedures seems to be in the lead here on our poll. No improvement. Those of you that are saying that, I'm glad you are here, and hopefully you're able to learn some ways that you can improve your process.
Hey, Larry, somebody just asked a question about the number of polls. There were 4 polls. If you're looking for CPE, you only need to respond to 3.
All right, thank you, Michael. And now this brings us back to our learning objective summary. Our esteemed panel has touched on how to identify and resolve common errors in the AMS reconciliation process, how to leverage automation and add efficiency, and the importance of teamwork and ongoing education. I'll let the panelists summarize their key takeaways from today.
I'll go first. Automate what you can and spend the time to think through a build of a new system, or if you're redeveloping your current system, really take the time to think about what you want. If you're implementing a new AMS, build what you need in the new system, not what you have in the old system. Building what you have may not allow you to realize the true efficiencies of the new system, and you may have the same problems you were trying to get away from. Let the system do the work for you. Evaluate the AMS merchant fees compared to your current merchant fees. They might be slightly higher, but efficiencies gained should pay for any increase in cost. And to have the best system you can, membership and accounting must collaboratively use the system as it was intended. Map the items in the AMS to the accounting system. And finally, as the saying goes, communicate, communicate, communicate.
And also, you want to know and document the flow of information. Know the source and how transactions are posted, for example, gross or net of fees. Have your procedural documentation. That roadmap is necessary and should be updated as processes change. Retain backup for all your supporting entries. And where possible, keep the general ledger general.
And last but certainly not least, reconcile your bank accounts at least monthly. This is one of the best ways to identify errors and their source. It's best practice to reconcile bank accounts prior to issuance of any financial statements. And again, remember, with accounts with large transaction volumes, consider increasing the frequency from monthly to weekly or even daily to reduce the time commitment during busy month-end close.
So we're just about out of time. Are there any last-minute questions in the Q&A? Doesn't appear to be. So I'd like to thank our panelists, Michael, Tiffany, and Liz, for their valuable insights today. YPTC is here to help you. Thank you so much for attending the presentation today. And remember, within 24 hours, you will receive an email link to the recording of this presentation and the materials. So it looks like we are now out of time. So everyone have a great rest of your day and hope you stay cool in this hot weather. Thank you.